Today, as we head into the election tomorrow, that's going to be a short-term fundamental event to be keeping an eye on. Already seeing the market start to price in some things here. Looking like the market was pricing in Republicans winning something. I'll show you what I mean by that in just a moment. And we also have CPI numbers this Thursday, which are also going to see a significant reaction in the markets as well. So first things first, what do I mean by Republicans getting some priced in action? So first off, DWAC, monster move. That's just on rumors that Trump is going to announce he's running for president. I believe this evening is the rumor. If that were to happen, and if we were to gap up, I would look for it to be a sell the news event and look for some solid hourly consolidation as a result of a gap up open. But elsewhere, we had Geo, private prison stock, breaking out to many month highs. We had solar sector red in a green market day. We had the energy sector up nicely, up at all-time highs again. And we had cannabis solid and red in a green market day. So these are all things indicative of Republicans winning, in my opinion, most specifically private prisons up, cannabis down, solar down. So keeping an eye on it, but these are more of the niche sectors that are more prone to react to the election. So S&P 500, hourly uptrend is our guide. We started today with just a clear tightening range, and we tightened up for pretty much 4 hours today, and then finally broke bull into the end of the day, and that bull break tells us we're not done bouncing on the daily yet. That being said, we're watching all of our major sectors and ETFs, SPY, QQQ, XLF, XLV, IWM, for signs of daily lower highs being the result of this bounce. Because if bears are going to prove their complete control, they already proved that they won the FOMC reaction. If they're going to prove complete control, they've got to confirm the daily downtrend. And then we'll be looking back at fear lows if that happens. If not, we're looking back at the FOMC reaction high. But that is still a bit of a ways away. Bulls are trying to get to the 50% retracement. We are about 3% away from a higher high. And if we're just looking at the FOMC reaction, we've got the high of the reaction and the low of the drop. And you can see we bounced 50% retracement. But there's space for lower high on the daily. Losing the hourly uptrend is the first indication of a daily lower high being set. Forgot to mention, redid the entries and exits course over the last couple of months. If you bought the previous one, then the new one is just updated in your account where the old one was. So I'll post the link in the comments of this video. And it is same concepts of the course, a little bit longer, and definitely made by a more experienced trader, myself, versus where I was 5 years ago. So S&P 500, hourly uptrend short-term guide, watching for the potential of a daily lower high. NASDAQ, same thing, more space for a daily lower high. We know the NASDAQ has been weaker because big tech has been very weak. So we've got 5% space for a daily lower high still on the NASDAQ. Our beat up big tech names have started bounces, some of them. Meta, solid bounce on the daily, but we know a daily lower high is the most likely result of this bounce. Google, hourly uptrend confirmed Friday, follow through today, but we know a daily lower high is the most likely result of this bounce. Microsoft, lead tech bull today. Daily lower high is less likely versus the other names, but it is still a daily downtrend. Apple and Amazon have not started daily bounces yet. Apple is an inside bar. If the inside bar breaks bull tomorrow, pretty much I need to see Apple and Amazon be the reason tomorrow that QQQ bulls keep this daily bounce going. If Apple and Amazon don't participate, QQQ's not going to go very far. Apple's got to break the inside bar bullish to get the daily bounce going, where we will scout a daily lower high to be the most likely result. Amazon, trying to build a base of support, got to get the daily bounce going from oversold conditions, where we will then scout a daily lower high to be the most likely scenario. So what's the takeaway here? The takeaway is short-term oversold bounces, but all of these big tech names, Netflix as well, tons of space for daily lower highs to be the result of this bounce. If you are looking bearish as a swing trader, you want these bulls to keep this bounce going. You want them to bounce through the votes. You want them to bounce maybe even through CPI numbers on Thursday. And then you want to scout these daily lower highs. Amazon can bounce 10%. and form a daily lower high. So patient bears are waiting for big tech daily lower highs is what it boils down to. The dollar is weak. So it's all about monthly inside bar support. Are we about to see the first convincing monthly consolidation in the dollar in the last 16 months? If 109.53 breaks, probably yes. We have a weekly downtrend with zero follow through, but we're on the verge of another lower low. That would be a win for crypto, commodity, and stock bulls. We had a big red day on Friday in the dollar. Commodities had a very big green day. Some commodities seeing their biggest green day in a single day that we've seen in years on Friday. So commodity bulls responding to that dollar weakness. All about 109.53. 4-hour downtrend is our short-term guide. Semiconductors stronger than QQQ recently. So a fresh bounce high, not convincing, but just the fact that we're at a higher high here when every other ETF that I'm about to show you is not hitting a daily higher high yet shows us that relative strength. INTC, that swing position from a few weeks ago, needs to break 28.83 for uptrend continuation. Daily higher low set. Bulls trying to maintain the daily uptrend to keep this bounce going. Healthcare. So this is what matters to me. When we had the FOMC reaction, I knew healthcare and the financial sector were our lead bulls. And the question after FOMC was, are our lead bull sectors going to join Team Bear and weaken from here and join QQQ weakness? And my statement was, if we hold daily EMA 12, bulls are just fine. And both sectors are holding daily EMA 12. What's going to be key for the next 2 days, do we break to a higher high over the FOMC high to keep the daily uptrend going, or do we set a daily lower high and tighten up? Because if a daily lower high is coming, that then opens the door for potentially confirming a daily downtrend. If XLF and XLV can set up potential daily downtrends, I'm going to shift my perspective notably bearish. I've been bullish for a couple weeks at this point. I will be right back on Team Bear if daily lower highs form. Tomorrow's a pretty important day for me as to whether those start to shape up. XLF is the same thing. That high of the FOMC, 34.60, is 1% away. If we set the lower high, it's a red flag for bulls. If we break resistance, it's a great sign for bulls. There are sectors out there that are still very strong. We know energy up at all-time highs is a strong sector. Look at the 4-month time frame. It's just ripping to all-time highs. Look at, this is SPY on the 4-month. EMA 12 trying to hold. Again, longer term structure of this chart, no red flags for me whatsoever. QQQ, a bit more of a significant pullback. Absolutely. There is space for a potential 4-month lower high next bounce. Look at industrials. XLI, that's a 4-month bull flag. Look at healthcare. There's nothing wrong with that chart whatsoever for bulls. So again, I just want to highlight that there are many sectors that are positioned just fine long term. And there are other sectors that are positioned a lot worse. Growth names, I mean, you look at NIO or any of these other growth names, they've got tons of space. ARKK. So we're starting to see things really shift here as far as names that are standing out a lot stronger versus names that are a lot weaker. IWM, watching for a daily lower high, anything under 185.60. This daily bounce right now is not convincing for bulls. If we roll over, whether it's a bearish voting reaction or a bearish CPI reaction, that's the next check mark for the bears. Confirmed daily downtrends, that's a big win for bears if that happens. If the lows of last Thursday hold, bulls have hope that they can salvage the bearish FOMC reaction and lead into continuation to higher highs, especially if the dollar is starting that monthly consolidation. Biotech sector, growth was weaker today. So notable in cannabis, biotech sector, PLTR dumped on earnings, ARKK was weak. So still range bound on the biotech sector, scouting a higher low compared to 76.07, but bears have had control the last few days. As I mentioned, cannabis red today, at risk of confirming a daily downtrend. Silver, 4-hour bull flag confirming, but not much follow through. If we fail 2124 resistance, which is the highest level in months, I will be scouting a daily higher low entry. And junior miners also have a lot of space for a daily higher low next consolidation. Silver and junior miners have my attention the most in dollar weakness because of how they are positioned relative to gold, and also just seeing a long-term bottom trying to form here. Oil, daily uptrend, weekly uptrend, but keeping an eye out for a potential monthly lower high, anything under 110.78. 4-hour uptrend short-term guide. If we lose it, we zoom out and watch for a daily higher low. Natural gas, big follow through for the bulls to start the week, but also a solid pullback now. Hourly uptrend lost. Scouting a weekly lower high to be the result of this bounce, hitting weekly EMA 12 resistance. We will have to confirm a 4-hour downtrend as the first indication that a weekly lower high may be shaping up. And that was just a little bit of a blow off kind of top there, where you have to keep in mind from these lows, we have already bounced 40% plus at this point. 4-hour RSI got real overbought. Not real overbought, but when you're coming from that significant a downtrend, 4-hour RSI up at 80, definitely overextended. 4-hour RSI at 80 in a weekly and daily, well, not a daily downtrend anymore, but in a monthly and weekly downtrend versus 4-hour RSI at 80 in a monthly, weekly, daily uptrend, they're very different things. The price action and trends are the number one most important factor to then utilize RSI as a benefit. Quick trade review, traded Meta today, and this was an interesting one for me because I shorted it and did well shorting it, but I had no intention of shorting it. So what happened was I pulled up this chart and said, wow, okay, Meta's been holding stronger than everything all morning. And so I went to post in the chat room, like highlighting how strong Meta is. And as soon as I did that, I recognized a rising wedge. And I said, okay, well, we're up over 6% on the day. So I might want to look for, and at this point in time, I had a good trading day where I shorted the broader market first thing. I sold half into the pullback on the morning. I reloaded half at the high of the day. I sold the half into the pullback. I played the equilibrium well. So I had a little bit of bear exposure, but mostly only long exposure. So, okay, if this is a rising wedge, so I'm gonna overlap a lot of puzzle pieces here. So, okay, Meta is up 6% plus. We know consolidation is inevitable, whether it's 15-minute, whether it's hourly. We're gonna pull back even if it's healthy. So I know that much. Now, am I confident that I can time the top? Not necessarily, but I recognized a 2-minute rising wedge was potentially forming. And when I first recognized this pattern, it was right here at the high of the day. I said, okay, that in conjunction with QQQ being in an equilibrium. And at that point in time, Meta, we're at just before 11 a.m. What is QQQ doing? We are heading for a 15-minute lower high. So high, low, lower high, higher low. We're trading right here. And I'm scouting for a 15-minute lower high to be the result of this tightening range, to continue forming an equilibrium. Knowing that backdrop of the more likely scenario for me of QQQ is why I entered Meta bearish. And so I shorted it at 96.67. So that was 21 cents off the high. What's my game plan there? I'm short. My stop goes over 97.01. If I stop out, I lose 15% of a day maker, which essentially means I give back some of the profit from my morning shorts that have gone well. We then pull back to support. I exit half of that position. So I set my stop loss 97.01. It doesn't trigger. I move. I sell half. So now my break even is something like 97.20. So now I can't lose on this trade. So, okay, what am I doing from there? Well, I want to start getting a little aggressive because I can't lose. I can't lose on my broader market short because I've traded the equilibrium well and my stop's over the high of the day for a small win. And I can't lose on this meta trade. So I averaged up. I reloaded where? So at this point in time, we have a 5-minute higher low where I exited partial position, a 5-minute lower high. If I wanted to be real aggressive, that 5-minute lower high top fish would have been a good one, but I wasn't that confident yet. So we came down and double bottomed at this 5-minute support, 96.13 and 96.12 right here. Very briefly for 3 minutes or so, but that was enough for me. And what I recognized was Meta is starting to weaken comparative to QQQ. So I'm looking for a QQQ 15-minute lower high. I'm seeing Meta, which has been a lead bull all day, starting to shift and show relative weakness. So again, at this point in time, this is from 11 to 11:30. And if we look at Meta divided by QQQ, when did we top out? Relative strength until 11, and then 11 to 11:30, we confirm a downtrend where we are now weakening comparative to the NASDAQ. So I shorted, and this was, I was fortunate here because I had a real tight stop, but I saw this little bounce and I reshorted my original position size. So now I'm at 1.5 full positions at 96.31, 96.31. I put my stop loss on that full position that I added back at 96.41. I'm risking a tiny amount. If we roll over and break this double bottom, then I now have a large short position. If we don't, and bulls defend support, I lose 10 cents on a full position, which essentially means my break even half short of 97.20 now has a break even of 97, still over the high of the day. So I will add to a position, which is, I did this to Bitcoin swing position as well. If I can add a position, increase the size where my break even is still under or above, whatever direction I'm looking in, still under or above a key support or resistance level, then I will do that. Just a quick side note here. Bitcoin, I had an average of 19.2. I added in the upper 20,000s because now my break even is 20,000. And there's a double bottom on the daily at 20,000. If 20,000 breaks, I want out of this trade. So I essentially just positioned myself for as large of a position as I could have while being risk-free, averaging up. So I averaged up, and then on Meta, I sold half. I sold fairly quickly because it was a large position, but sold half of the new position, sold the other half, forget exactly where, 96.03 and then 95.80s. And so now I'm back to my half original position or quarter of a double position. So half of the original position, and I went to the grocery store, I let it play out, and I came back and sold right here as I was anticipating a bull move on QQQ. I was making decisions on Meta based on most likely scenarios on QQQ. And I covered the last of it in the 94.50s right near the low of the day. And that was a solid win. Almost went long. Didn't do it. Would have worked out. Almost went long for the hourly high or low, knowing that that was the most likely scenario. So that's something in hindsight I could have improved upon to really smash the day. But overall, a good one. And today was flow state of just, I think I stopped out of my short eventually, but didn't have a losing trade. I think it was 4 for 4 or 5 for 5, something like that. Certainly not always like that, but nice to start the week that way. And it was just smaller position sizes. I sized up once I was comfortable, but tomorrow I'm scouting for daily lower highs. And I'm going to do the exact same thing. Try and position in low risk or risk-free bearish positions. If bulls keep proving it, I stop out, don't lose anything, and my IRA keeps benefiting long positions. If we set daily lower highs, I've got a position to offset my IRA dropping on that consolidation. Hope you had a good weekend. Check out the new entries and exits course and do good things. Still getting some 70-degree days here to start out November. The willow, what is it? Oak willow and the cypress trees dropping their leaves, which means multiple times every day I come out and clear these pipes because all these leaves in the water clog up the flow. So I take my scooper, clear it out.